So we're here today with one of the most respected traders in Singapore, Mr. Robin Ho. Nice to meet you.
My pleasure.
Yeah. So he's one of our speakers in the upcoming Investagrams Traders Summit in July 27, and we're here to get to know about his experiences better. So Robin, tell us about your background on the financial markets.
Well, I have been, before I joined the financial market, for 23 years, I worked in the Singapore Navy as a naval officer. In fact, when I was in the Navy, I captained a ship before. Yeah, I captained a warship before. But I decided to end my career prematurely, all right, to go into trading. Because in the Navy, I was serving in the Navy, I was trading a little bit part-time, and I found my passion there, and I decided, although it was an iron rice bowl, and it was a great career, and I would have retired comfortably, if I have just hang around for another 10 more years. But I chose to burn the bridge and started a career in trading.
Oh, so what made you realize, or what did you realize when you made that jump from the Navy to like full-time in the markets?
Okay, so, I feed a household of 7 people. Nobody's work in the family, and my Navy salary was beginning to get a little bit stretched, and feeding a family in the most expensive city in the world is not easy, and I just wanted to find something to supplement my income. And I thought the best thing to do in the Navy is to start a trading account. Started with a little bit of trading and a little bit of investments account, which I could do part-time. And then it turned into something that I love, and I decided that I should, just take it full-time.
Oh, okay. So after the Navy, what was your first financial related job? So in the markets.
Well, after the Navy, I joined Kim Eng Securities as a stockbroker. I spent 3 years there, and then I came and joined Philips Securities. So I have been in Philips Securities for the last 18 years.
Nice. All right. So I read your profile, and it was mentioned there that at some point you made 300,000 SGD or USD, but then you lost it in your initial parts of your trading.
Oh yes.
What happened?
That was during my Navy time when I started to learn how to trade. But when I started trading, lo and behold, it was a time where our Singapore market at that time was in Singapore market we could also trade the Malaysian markets, and that was one of the best time that we had in the Singapore markets.
What year was this?
And that was about 1996, if I can remember.
1 year before the crisis.
Yeah, that's correct. Okay. And at that point of time, the market was very active, very volatile, and it was a full-blown bull market.
Okay.
So I started learning at a very opportune time of trading, but then now looking back, I started learning how to trade in the midst of a bull market. So when you learn how to trade in the midst of a bull market, all right, technically you don't need a lot of skills.
That's true.
All you need is a lot of guts. So I started with a very small capital of like $3,000 of my own income. I had a lot of guts, and because it was like a super bull, it was the best bull market they've experienced in the Singapore stock market history.
Okay.
Yeah. And because of that, the market momentum actually helped me to make the money. It was not really my skill. I knew nothing about trading. All right, all I had was guts, and I keep rolling the $3,000.
So you just keep on going all in.
That's right. And during those days, in the Singapore stock market, we have this phenomenon called the contra phenomenon, where you don't have to pay up your stocks. You have a grace period. When you buy a stock, you have grace periods of 2 weeks.
Oh wow, that's a lot.
Yeah, 2 weeks. So I just kept rolling my $3,000, and over a period of 12 months, the $3,000 became $300,000.
But you were using margins as well during that time.
Well, I was not. I didn't have enough money to go to margin. I was just using cash, and every time I made the money, I just plow it back to
the account.
My account again, and I kept rolling it.
Okay.
Yeah.
But during your starting point, what was your strategy, or what was your thought process during that time when you're choosing your trades?
Well, in those days, it was really quite simple. All you need is in a bull market, all you need is to just watch the top volume page. Okay. All right, and any stocks that just comes into the top volume page, it will have a lot of momentum, and you will have a lot of people just coming in to buy up the stock. And all I need to do is, when I see that just appearing on the top volume page, I'll just jump in and buy it. And I'll just hold as long as I can. Yeah.
What was your basis for selling? Gut feel, or?
Well, my basis was for selling, really, because I don't have any trading skills. My basis of selling, no basis of selling. When the contra period ends, when I have to liquidate my position.
I see. That's where you sell.
And I sold it. Yeah.
So no technical analysis.
No technical analysis at all. Yeah.
Okay. So I think the other part is, how did you lose that 300? What happened there?
Okay, so what happened was that I made $300,000, and that was at least 40 years ago. And I remember at that point of time, I had so much money as a young man. I was back there about in my 30s. And with $300,000, I could have just retired then. Yeah, I could have just bought a freehold condominium, and I could have just retired. But I chose not to. All right, I grew greedy. Yeah. I wanted to make $1 million. Yeah. And because I wanted to make $1 million, I need to trade a lot more. Yeah. So, I was just caught in my greed, and I just exposed myself with a lot more position than I used to. And then with such a huge position in the market, exposed to such a big position in the market, what happened was, if you have read in history, I was trading the clock market, and then the Malaysian government came down, particularly Dr. Mahathir. He came and he said, sorry, this is an illegal market. Yeah, and we couldn't be trading in the Singaporeans cannot be buying Malaysian stocks on the over the counters. Yeah. And then just because of that news, the market on the following day crashed. And at that point of time, I was such a novice in the market. Yeah. I did not cut my loss. Yeah. I held on for 1 week, and I lost everything. I lost my $300,000, and on top of another $200,000, and that was in total $500,000.
The 200 was a loan or something?
So the $200,000 became my debts now. Oh. So I had to now find a way to pay the $200,000 debts. Okay. And I remember I just got married. I had to sell away my matrimonial house. Okay. And then we have shifted into a rental flat just to pay the debts, and that was still not enough, So I had to be borrowing from high interest loans, high interest lenders, high interest loans, borrowed from friends, borrowed from family members, just to get over.
Oh, just to cover the 200K.
That's right. Yeah.
Okay.
Yeah.
So the next question there is, how did you recover? Since that's a very tough spot to be in.
Yeah,
Do
at that
next.
point of time when I was just starting a family, and as a young officer, I do not have a lot of income coming in. I knew it was going to be, tough for me to just pay off the $200,000.
Yeah.
And many times I contemplated just declaring bankrupt. But I held on to it, and I thought the best way to just come back to the market and pay my debts was to go back to trading.
Okay.
Yeah. So I went back to trading again, but this time I learned a skill first. Right? I did not just go in there. I realized that what I did back then when I lost those money was just pure guts.
Oh, yeah.
There was no skill involved.
Okay.
So this time around, I read a little bit, about how to trade in stock, and with some very simple strategies, I traded the market and I managed to recover my losses.
Oh.
Yeah.
Where did you get the starting capital when you were trying to trade again?
Every month I have like $3,000
Oh, okay.
of my salary,
Yeah.
and 1,500, half of it is to pay the interest for the loans, and not even paying the capital.
Yeah.
And just with $1,000 or $2,000 cash that I have, I just traded the market. Remember, in the Singapore market back then, all right, you don't need money to trade.
Yeah.
All right, because of these contra facilities.
Yeah.
And also, what you need is a broker that gives you a line.
Yeah.
So I was just able to pay the losses. I was not able to pay the total value of the stocks
Okay.
that I bought.
Yeah.
Yeah,
So you just you use margin to just cover if there are any losses.
that's right. That's right. So my time frame was only 1 to 2 weeks of the contract period, and that's it. So I just kept doing that, and with a couple of $1,000s, I managed to cover my debts.
Oh,
Yeah.
nice. How long did it take you for that process?
Well, it took me like 3 years.
3 years.
Yeah.
Wow, that's really a grind.
That's right, and that was really, some very deep end that I went in, and it was so hard to climb out.
Yeah.
And I was so glad that I was able to get out of that. Yeah.
So what changed when you tried trading again? Like, what was your new approach? What did you learn from your studies, or what was your general strategy during that time?
Yeah, so during that time, right, I knew I did not have enough capital to trade. I only a small capital. So I need to trade like a poor man.
Okay.
So I call that a poor man trading strategy. So a poor man trading strategy really is that I cannot be chasing the markets.
Yeah.
So I have to be just watching for like nascent reversals. So when the market is just about to turn, looking at the technicals, looking at the charts, I would take my chance.
Yeah.
And then I would try to find a trend. And where there is a trend, I will try to ride on it.
Okay.
And at the slightest turn or breakdown on the charts or on the price, I would cut my losses.
Yeah. Okay.
Yeah. So I'll try to ride on my trend as long as I can, and I would just try to cut my losses at the earliest sign of trouble. Yeah.
Nice. So all of your stops were mainly price action based?
Yeah. So I trade just watching price action, and price action really comes with volumes. Just watching how the volume moves with the price. Yeah.
So basically, you monitor stocks that have been super battered, and then when there's signs of reversal, you start to position in them.
Yeah.
And then you try to ride the trend.
That's correct.
As long as you can.
Yes, right.
Oh, yeah. No wonder the returns were really great. Yeah. So far, what was your most memorable trade in your career?
Well, I wouldn't say it's a single trade.
Yeah.
But I would say that my big break came in 2008.
Oh, okay.
And in 2008, with a very simple trade plan that I developed, I believe that the market has hit its peak, and I decided then to put $100,000 into my CFD accounts.
Okay, the short.
For the short, because I believe the market has peaked, and I expected then that we will have a market crash coming soon, or crisis coming soon. So I just put $100,000 into my CFD accounts.
Okay.
And then when the opportunity came, I shorted the markets.
Okay.
And everybody, I shorted the market, and it was the right time. It turned out to be a global financial crisis.
Yeah.
And when everybody was losing a lot of money, I was just ironically, making the most money in my life.
Oh, so you just held that 100K short up to the bottom part?
Well, I didn't just held it.
Yeah.
All right, I just held it, but this time, I traded with a strategy.
Oh, okay.
So what I really did was that, I held a portfolio of about 50 stocks. I just monitored them very actively with a trade plans. And the idea was really to be riding the trends as long as it lasts.
So downward.
Yeah, downward trend.
Okay.
So because I was bearish on the market, I only sell. I was just looking for a shorting opportunity. So in those days, because it was a big bear market, just riding the trends was very profitable.
Yeah.
I don't have to trade a lot.
Okay.
All right, I just have to riding the trend and just always every day just looking for the weak stocks also, because it was a bear market. I had to just identifying the weak stocks. Yeah.
So what convinced you that 2007 there's a crash coming up? What did you see during that time?
Well, what I learned over the years of trading was in whatever we do, we need a trade plan.
Yeah.
So I developed a proprietary trading strategy called, my own trend following strategy. And that is also what I would call a price action strategy.
Yeah.
And from the price action, I would be identifying some prevailing trends, and from those prevailing trends, I'll create a trade plan.
Okay.
All right, and that trade plan, right, will tell me where the market will top out, all right, or where the market will reverse. So my proprietary trading method is really in identifying market tops and bottoms, all right, so that I don't take a lot of risk, all right. So remember, my background started with, this strategy called poor man trading strategy, because I don't have a lot of capital. Yeah. So that's how I develop a strategy like that. Yeah.
I see. So recalling, what was your biggest mistake in your trading?
Well, I remember that after I left the Navy, around about in year 2000, and I joined I joined the Kim Inc. Securities. I was a broker then.
Okay.
And at that point of time, after serving 23 years in the Navy, I had a gratuity of like $200,000.
Okay.
Yeah. So that was my gratuity, and I actually used it for my capital, right, for trading.
Yeah.
But, when I went to industry, a friend of mine recommended me IPO.
Okay.
All right, IPO, and the name of it's a RTO stock, a reverse takeover stock. All right, the name of it is called Anaman Inggu. Okay. All right, in Malaysia. Okay. Well, I believe in that guy because he was my best friend. All right, and I just took the $200,000
All in.
All in.
Oh shit.
And boy, not even knowing what the stock is all about, just believing in my best friend.
Okay.
All right, and then I got caught out of it. When the market opened on the first day, well, I lost 70%. It was down 70%.
2000.
Yeah.
Is it because of the global crisis?
No, it was nothing to do with global crisis. It was just a stock that turned out to be a scam. Yeah, and I believe in it. So, can you imagine? This $200,000 was something that was a money that I was supposed to for my life savings. So it's used for trading. And when I came out, when I lost the money, I was like, just went back all over again. To scratch again. Yeah.
Yeah, tons of hardships during that
Yeah,
time.
challenging. Coming into full-time trading. All right, it was a really bad start for me. Yeah, I thought the 200,000 was my capital, and I lost 70% of it.
So 70% then you cut loss.
Yeah, I cut lost.
Oh, you took what's left.
Yeah, I took what's left, and then I grew from there again.
Okay. So back when you shorted 2008, 2009, when did you stop shorting? Like what was the market sentiment during that time that made you realize that hey, it's becoming bullish again. I need to reverse my positions.
See, I wish I could show you my trade plans, but here I could not share a trade plan. But I could just tell you that briefly how I in my trading strategy, how I would just guess or predict a market bottom. Two things. Right, one is on the market trends, on the trade plans, and the other thing is just be watching the greed and the fear. And the greed and the fear really shows up in volumes. So I remember that when I first started shorting the market, there was not a lot of volumes. And round about when the market was about to turn, the volume just expanded exponentially. And I could see the fear that comes into the market. At the bottom. Yeah, at the bottom, and there was so much volume in it. And that volume happens to just coincide with the support line that I drew at the bottom of my trade plan. And with that volume that indicates a lot of fear, and with the price just touching the support level of my trade plan, I decided that, well, that was it. Market could have bottomed. I just covered everything and turned into a long position.
Nice. So mainly during this time, were you focusing on Singapore stocks or USA stocks?
No, I was just at that point of time. Everything was Singapore stocks.
Oh, okay, Singapore stocks.
That's correct. Yes.
Okay. So right now you've been teaching a lot of students. Yes. So one question that I'm curious about is, what is the common mistake or errors of amateurs or beginners when they come into the markets? What have you observed on this?
Well, when beginners come to the market, they always looking for a holy grail, right? A holy grail of trading. They always think that there is a special strategy or special trading solution out there that can help that will be able to help them to beat everything else, all right, in the market. So a lot of beginners when they started off, all right, so they look for this. But the fact is there's no one holy grail in the market.
That is true.
All right. So trading is a lot about hard work. You need to put a lot of time to research the market. You need a lot of time to just do your trade plans, right? Plan your trades, and then to trade your plans. So a lot of beginners go in there, and a lot of them will trade, listening to rumors, all right, listening to recommendations from research reports, and also listening to friends, and also just going into hot stocks, and they get themselves burned.
So when you see students like these, could you give us a general or just a preview how you train these students that come to you? Like what's your initial way or approach?
Okay, so in my proprietary strategy, I will teach children a couple of things, and I'll tell them that trading is all about art, a science, and timing.
Okay.
So you have to understand the art of it, the science of it, and the timing of it.
Yeah.
So what is the art? All right. The art is be able to spot a trend in the market.
Yeah.
That's the first thing. That's the art. The science of it is to be able to understand the greed and the fear and how it shows up in the market.
Psychology.
And that's the psychology in the market.
Yeah.
And if they, after understanding the art and the science, they need to translate these two into timing. When to get out, when to get in, when to get out, when to buy at maximum fear, when to sell at maximum greed. That is all shown up really in the volumes. Yeah. So for students that they come in, I teach them the basic of price action.
Yeah.
Then with this price action, from there we develop a trade plans.
Yeah.
Everything really is based on the trade plan.
Yeah.
All right. Your risk management, where you get into the market, where you get out in the market, is really based on your trade plans. And from the trade plans, so many of the students before they come to me, right, they will be using methods like trading the indicators, and a lot of these indicators are really lagging. But when and you're taking a lot of risk. You're taking a lot of risk when you enter a position. You enter a risk. You take a lot of risk because they are lagging. But if you trade with a trade plan, right, and watching the price action, you are able to call the reversal, all right, without taking too much risk. And you're able to, most of the time, long or short in the stock just before it turns. So that's my key strategy.
Basically knowing what to expect and how to react based on chart patterns or structures and trends. Okay, that's nice. So in your career, who were your role models, or like what books made the most impact to you, or who are the fund managers that you idolized?
Well, when I first started trading, the first book that I read was the book from Jesse Livermore.
Oh, nice book.
Jesse Livermore, and this book that I read about him, the first book from Jesse Livermore, I respected this guy a lot because he was just like in the 1920s, right? He was just a ordinary worker that earns a very modest salary, like a few $100. And from there, he traded and make the billions of dollars in the 1920s. And what caught my eyes was in his conclusion, right? He said that if a person wants to come into trading, right, success comes from learning a life skill. Right? You have to learn life skill. You cannot depend on somebody else.
That's true.
So you need to learn a life skill. And he said that his skills, right, was really based on price action. His strategy was based on price action. But he didn't describe a lot about price action in that book. I went out in search of that price action, and over my trading career, I developed my own price action strategy.
So I can relate to what Robin shared, because the book of Jesse Livermore is also one of my main inspirations. And he did describe a lot there about price action, how he followed the ticks, and how he would enter when the market was on breakouts during that time. I think the term wasn't even famous. The breakout term wasn't even famous during that time. And I remember from that book, one of the most striking lessons to me there was he said that it's not about being so active in the trading that makes you rich. It's about being right and staying right in that trade that will make you rich, staying in that correct position. So that's the most impactful lesson that I learned from Jesse Livermore. So how about you? What among his principles or anecdotes, what was the most striking to you?
Well, exactly. I think you hit the sweet spot. when I first started trading, I always thought that if I spent a lot of time on the screen, and I spend a lot of time on my trades, just watching it minute to minute, I would make more money. I would perform a lot better. But today, my view sort of changed after so many years of trading. What I learned is that first you have to understand the big picture, and the big picture is in your macro trade plans. And the macro trade plans really will tell you where the big direction is, where the big trend is, and it will also give you a target price, right, to achieve. And with that macro plan, right, you now form a conviction of where prices are going. And with that macro plan, what I would do is that I would now, I trade a lot less. I trade, in those days, I remember my commission alone, right, a month in Philips Securities, in the 2007, 2008, my commission a month can come up to a few $100,000.
Wow.
Just commission alone, right, because I just trade very frequently. And just spending a lot of time just watching the market, trading the ins and out. But today, with the macro trade plans, I trade less, but I make more money.
So that's an important lesson that we want to focus on. Robin iterated the importance of focusing on the big picture, because one observation that I've seen also is a lot of traders get impulsive in the market, trading short-term breakouts, even though we're in a bear, even if we're in a bear scenario, they would force breakouts and all of those. So that's the importance of knowing what kind of environment you're in, so to adapt. So right now, speaking of adapting, how are you doing today? How do you adapt in today's changing market, given that it's more quantitative now? There's lots of high frequency traders, or it's more globalized now. How are you adjusting in today's market?
Today the market has, we have a lot of program trading in the markets. You could see a lot of trades when there is a breakout, the prices will move very fast in one direction. You could see, and in the US market today, 80% of the trades are done by program trading. So in the days past, when I first started trading, we don't have things like that. All the trades were done by a lot more. All the trades are done by human beings.
By call.
By call.
Blackboard.
And everybody just watching the markets, eyeballing the markets. So today what I do is I develop a couple of stock screening programs on my own. And so what I do in the morning is really to be scanning the markets for very unusual price action. And when I see some unusual price action, for example, like a price breakout or a very unusual volumes, I would just kneel down to the stocks, open it up, check, the company fundamentals, check their technicals, and just looking at the charts to find an option time to get in there.
Nice. So with Robin's experiences from losing 300K, 200K, I've read that now you're in the 8-digit level. You're trading 8-digit level in your profile. Is that correct?
But like I said, now I'm just in my trading. I'm trading a lot less, but I'm making a lot more. And also I have a lot more free time on my own.
Okay. So right now, where do you focus on, US or Singapore stocks?
So now I trade a lot on the indices, the US indices, particularly the Dow Jones, the Nasdaq, S&P. In the daytime, I do a lot of China A50, Hang Seng Index, and the Singapore stock index. So in the daytime, I trade a lot of indices, and I have developed a strategy called the RHO intraday trading strategies, and that strategy has only been launched for 1 year, and we have like hundreds of subscribers that come in, and that is the only strategy in the world that trades indices intraday. And I've launched it for 1 year, and the performance has been amazing, and if not astonishing. And a lot of people are just using that strategy even just to trade full time. So I now too depend on my own signals, just using that RHO intraday signals to trade indices. And besides indices, I trade a lot of Singapore stocks, Hong Kong stocks, and the US stocks.
Okay.
Yeah.
Nice. So in your career, what is your biggest lesson that you'd like to share?
Well, my biggest lesson is when it comes to trading, all right? I took a long time to understand the meaning of having a plan. Right. So many times, when I, as a full-time professional trader, I'm very influenced by what happens around me. All right. What other traders do. All right. I'm influenced by my own emotions. And a lot of times I got into bad trades. All right. Just being sidetracked. So my lessons, right, that I, primary lessons that I learned is you must spend a lot of time, right, just doing your trade plans and just be trading what you planned, knowing your risks, knowing where the market is, knowing where you are. What I mean where is knowing all your trades. All your trade, every single shares that you are holding, all right, and also in time and space where the trades are, whether they're in danger of breaking down, or they it's time that you should be cutting losses on them. So just you need to know where the market stands and where your position stands. All right.
Being aware of reality.
That's right.
Because sometimes traders don't accept reality, which is why they hold on to slumping positions. Yeah, that's very important. So, last question. What are you discussing on the upcoming Investagrams Traders Summit on July 27? Tell us about a preview of what you're going to share.
Well, first I'm going to tell you, I'm just going to show the investors, all right, so many of my calls that was spot on, calling the market crashed in 2008, how I made those calls, and even recently, some of the very good calls that I made, how I did it, and I want to share with them my proprietary strategy, how this proprietary strategy is able to call market tops and bottoms, and I hope people will come and listen to me to hear my proprietary strategy.
We're so excited to have you on the event. I'm sure it's definitely an honor and an opportunity to learn from one of Singapore's most respected traders, Sir Robin. So thank you so much for the time.
Oh, thank you, JC.
Yeah, it's a pleasure to meet you.
It's my pleasure.
Yeah.